Welcome to LV Browne CPA's weekly webinar, where you'll find the latest news that will help you see your way forward. LV Browne CPA provides accounting, tax, and advisory services for small businesses, nonprofits, and individuals. Let's get started. This week, we will be focusing on 4 tax strategies that you can use jointly with your CPA in order to minimize your tax liability. It is important for small business owners to work with their CPA on a regular basis throughout the year to prepare a tax strategy. Many people don't realize that there are many ways to decrease your tax liability. Don't wait until the end of the year to get started because it'll be too late. In this video, we will talk about 4 tax strategies that can get you started working on a tax plan. First, plan to take advantage of all tax credits. A tax credit is a dollar-for-dollar decrease in your tax liability. Talk to your tax advisor about the many tax credits available to you. There may be advantages for going green by buying energy-efficient business vehicles or property, making the workplace suitable for workers with disabilities, hiring certain types of employees, allowing employees to take family leave, or providing health coverage. Take advantage of any and all tax credits available to you. Email me and I'll send you 15 business credits that every small business owner should know. Second, the end of the year is a good time to do an assessment of whether or not your customers are likely to pay you or not. Write off as much of these bad debts as you can justify. This will increase your expense, decrease your net income, and reduce your tax liability. Third, make sure you are recording all of your business expenses. Many people don't set aside enough time to make sure they are recording all of their business expenses, which can result in bad money management as well as overstate net income. Work with your CPA to make this process as easy as possible. Another tax strategy that will decrease your tax liability is knowing when to capitalize and when to expense assets. Depreciation is the process of expensing the cost of an asset over the life of it rather than expensing the cost all in one period. Work with your CPA to determine a reasonable capitalization threshold. Anything under your capitalization threshold would be expensed. So the higher your capitalization threshold, the higher your expenses and the lower your net income, saving you tax dollars. For example, if you think you'll have high income one year and will need more expenses, this would be an area to look at. Work with your tax advisor. So, we have discussed 4 tax strategies to implement in order to successfully prepare a tax plan. Taking advantage of all tax credits available to you, making sure you record all business expenses daily, writing off bad debts, and knowing when to capitalize your assets. These are all ways to decrease your tax liabilities and keep the IRS out of your pockets. If you have any questions regarding these or any other tax strategies, or if you want the 15 business credits all business owners should know, be sure to contact me. Thanks for joining us today. Once again, if you have questions regarding the information provided, feel free to contact me. If you enjoyed this video, please give it a thumbs up, comment, and subscribe.